Is the Bitcoin price being suppressed by ultra-wealthy individuals or perhaps even nation-states using massive shorts on futures contracts? We're going to talk about this controversial theory and the implications it could have on Bitcoin if true. Could this doom Bitcoin to end up like gold, having its price manipulated down in perpetuity? Or could it be the setup for the mother of all short squeezes that accelerates hyper-Bitcoinization and the death of all fiat currencies around the world? Let's dive in. Now, I'm sure most of you know the difference between real Bitcoin and paper Bitcoin. Paper Bitcoin is an IOU or promise of Bitcoin, not unlike the fiat money you have in your bank account or the Bitcoin that's held on exchanges. Unless you control the private keys that prove to the network which coins are yours, you do not own actual Bitcoin. You own a promise of Bitcoin. The most extreme example of this was when FTX collapsed late last year, and it was disclosed that around $1.4 billion worth of their customers' Bitcoin didn't actually exist. FTX sold paper or fake Bitcoin to their customers. Another less understood form of paper Bitcoin are derivatives like futures contracts, which are simply a bet on the price moves of Bitcoin. So you can buy or sell a contract of Bitcoin at any given price in order to make a fiat value bet on which way the price is going into the future. As Bitcoin futures markets have increased in trading volume in recent years, there's been a lot of talk around the ability of large and powerful players to use them in order to suppress the price. Now, there's good reason for this concern, as it's pretty clear that this has been happening to suppress the price of gold for decades. Just ask our old pal Peter Schiff. We'll get into why this could never happen to Bitcoin at the same scale a little bit later. There are some instances where you may want exposure to Bitcoin's upside in your traditional investment portfolio like retirement accounts, and that's where Swan Bitcoin IRA comes in. Peter Thiel famously turned $2,000 into over $5 billion using the tax benefits of his IRA to acquire an asset with massive upside. You may not have access to preferred Facebook stock like Thiel did, but you do have Bitcoin. To benefit from Bitcoin in your IRA, all you need to do is set up an IRA with Swan, allocate real Bitcoin to it, allow it to appreciate over time with zero capital gains taxes, and enjoy your retirement. Go to swan.com/retire to learn more. So this price suppression via paper Bitcoin FUD has resurfaced as of late by Willy Woo, a well-known analyst and trader, who explains it a lot better than I can on a recent episode of What Bitcoin Did.
When we're talking about these paper instruments, they're all about short-term trading. So if I want to sell Bitcoins right now because I just think it's going to go down, or I want to force it to go down because I've got a lot of money and I can make it go down, I will just sell down that derivative contract. I'll just sell and sell and sell. Like, how much can I sell? Maybe 10 times more than the money I've got. And maybe I've got like $10 million. I can sell $100 million all within 1 hour, maybe in 5 minutes, and I can push that price down. Does that affect the real value of Bitcoin? Who thinks yes? Who thinks no? The answer is yes. Because there's this thing called an arbitrage trade, which is actually our business. Our business is make sure all the markets are equal. So if this paper contract is down here and Bitcoin's up here, sell the Bitcoin, buy the paper contract, and they will close up. And while I do that, I earn a funding rate, and the demand and supply from both markets will converge. Guess which market is stronger, paper markets or the real market? It's the paper by a factor of 10, and maybe a factor of 100 in some markets. So if you control the paper market, you can push the price around anywhere, and you can control that by having a bunch of money and you leverage it up. And then there's a war going on from these guys playing the paper markets. That's how it happens in the short term, but in the long term, you can really do a longer term incentivization to really put a cap on that price if you were a government.
What Willy is talking about here is in theory true. Entities with massive capital could suppress the price of Bitcoin in the short term by selling large amounts of futures contracts with leverage. It's important to note that this suppression has been happening with gold for decades, with some estimates that paper derivatives of gold outnumber real gold by 100 to 1. This level of manipulation is much harder to do and near impossible to maintain with Bitcoin due to its superior properties as a bearer asset. The entire supply of Bitcoin can be audited and verified much easier and more rapidly than that of gold. Gold supply is heavily centralized and relies on trust to be audited correctly and honestly. Bitcoin is also much easier to take custody of than gold due to its digital nature. Now back to Willy's theory. He's been tweeting about it recently, even theorizing that this is also likely the reason why a spot ETF hasn't been approved. He even goes so far as to insinuate that this is something governments could be doing in order to prop up the fiat Ponzi for longer. He tweets, On futures markets, a nation-state attacker could sell futures contracts for every long buyer to infinity. They could sell contracts for 42 million BTC easily, just to paint that picture. Why? Because futures are now collateralized in infinite supply USD instead of limited supply BTC. 20 trillion of USD around, and it doesn't take much to print more versus half a trillion market cap for BTC. This is the reason why I believe the SEC has continually denied spot ETFs in favor of futures ETFs. This defends the fiat banking system. Now, this sounds doomer as hell. It's basically the opposite of Pierre Rochard's 2014 essay, Speculative Attack, which outlines the theory of an attack on the dollar via borrowing or printing fiat to buy up all the Bitcoin. What Woo is saying is that nation-states or banks can theoretically print infinite amounts of fiat in order to short Bitcoin by selling futures contracts with massive leverage, thus suppressing the price and propping up the fiat Ponzi. So it's that easy. Print a bunch of money and suppress the price forever, right? In reality, I think something like this would be extremely risky, and looking at it through the lens of game theory tells a very different story. Let's say the US government or the Fed hatches this genius plan to prop up the fiat Ponzi by suppressing the price of what they rightly deem to be the greatest threat to the US dollar, Bitcoin. So they start building up this gigantic short position via paper derivatives using leverage. We know they can print as much as they want, so they print more and more to keep the price down regardless of supply and demand dynamics on the spot price. Keep in mind that as they continue to print money, the dollar value of Bitcoin slowly increases due to the finite scarcity of Bitcoin versus the infinitely growing supply of dollars they are printing more and more of in order to keep the price down. It's a bit of a catch-21. While the US prints infinite fiat to suppress the price, the cyber hornet psychopaths who are hell-bent on seeing the fiat Ponzi collapse and a new, more just monetary system replace it keep buying up cheap sats daily and moving them to cold storage, slowly eating away at the dwindling supply. And let's not forget that in times of increasing government surveillance and censorship like we see today, there will always be a growing demand for a monetary system that can't be manipulated or censored. So while they continue to keep the price down like a giant beach ball underwater, more and more people begin to understand the incredible utility of the world's only open, borderless, and truly scarce money. Trust continues to erode in fiat currencies around the world, and more rush onto the lifeboat that is Bitcoin in self-custody, driving up the price in dollars while the losses from the paper short positions reach infinity like the supply of fiat itself, setting us up for the mother of all short squeezes that culminates in the most spectacular fiat supernova and the birth of hyper-Bitcoinization. While this sounds totally badass, I actually don't see it playing out this way, because the game theory would say that any rational nation would eventually realize the futility of shorting the hardest money the world has ever seen. What would be more likely, in my opinion, is what Pierre Rochard theorized way back in 2014. They would instead adopt Bitcoin out of self-preservation and print whatever they can leading up to their inevitable currency collapse in order to shore up their position. So while it's an interesting thought experiment, it's my belief that shorting Bitcoin will always end in complete disaster and abject poverty. This goes for everyone, including central banks and nation states. So what do you think? Are massive whales or even nation states suppressing the price of Bitcoin right now? How do you see price suppression like this playing out? Is it a threat or a non-issue? I'd love to hear your thoughts, so leave a comment below, like this video if you enjoyed it, subscribe to the Swan Bitcoin channel for more content like this, and while you're at it, check out my video from last week all about voting for change by stacking sats, and my video from a few weeks ago on Bitcoin and the new monetary order.